So all we're going to do is add the banks and the credit unions to what you already have. If you all remember, we spaced it out on your paper. Y'all remember that? And we filled out the payday and we filled out the same cash ones. So now we're under banks, okay? So underneath banks on the board, it says that they offer customers checking and savings accounts that are insured by the federal government. So the first thing we're going to jot down underneath bank. Now obviously, guys, a bank does a tremendous amount of things. But for our purposes, the first thing we're going to put down is that it gives us checking and savings accounts. Now, I'm not trying to insult your intelligence here, but does everybody know the difference between a checking account and a savings account? Somebody tell me the difference. Well, look at it like this. Can I draw interest on a checking account? Yes or no? What do y'all think?
Yes.
I can. When I get paid at my job, okay, I'm going to put that money into my checking account. The bank isn't going to give me interest on that. That's the money that I have available to be able to spend whenever I need it. Does that make sense? That's my money, so I can come and get it as I please. A savings account is literally what it says. I'm going to give a bank money, and they're going to put it in a savings account. Now, can I go get that money when I need it? Yeah. But the idea is for them to keep it and them pay me what on it? Interest, right? So, checking, no interest. That's just the money you have for everyday usage. Savings account does draw interest. Y'all got that? It says that they give you long-term loans. So the second thing we're going to put under banks, long-term loans. One of these days when you guys finance a house and you have a mortgage, more than likely you will have went through a bank to get that. You're going to have a very low interest rate on that mortgage. Why? The bank doesn't have to charge you a high interest rate on that because you're going to be paying for it for 15 or 30 years, right? So they're going to make their money back. So long-term loans, okay? And then parentheses beside of that, if you look up there on the board, write this part down, home mortgages, or just put down mortgages. Okay? Those are long-term loans. Can I get a long-term loan from a check cashing store or a payday loan store? No, those are all short-term, right? So, long-term loans such as buying a home, making big payments once a month for 15, 30 years, whatever what you set it up to be. Okay? Most banks offer credit cards. So the third one would be credit cards. Now, what's the difference between a debit card and a credit card?
Debit card is linked to your checking account, right?
Yeah. A debit card, do any of you guys, I know I've asked you this before, do any of you all have a debit card?
I've used my mom's.
None of you have a credit card either, I don't guess. All right, a debit card is what Layla just said. It's linked to your checking account. So if I've got $300 in a checking account, and I go to a store and want to buy something and my cost is $50, I can swipe my debit card in the card reader, right? They're going to subtract $50 out of my debit account, my checking account, and then that's paid for. You guys understand that? Now, a credit card works differently. A credit card is not linked to any type of account that you have other than your credit account. Now, you guys remember yesterday us talking about having good credit, bad credit? The idea is to have what type of credit? Really good. You want to make your payments on time, and over a period of time you build your credit up to where you can borrow more money. The better credit you have, the more money you can borrow. Does everybody understand that? So when I use my credit card, as long as I'm making the payments on that, I'm good to go. But I may have a limit on what I can spend with that. Like, for example, when you guys get a credit card one of these days, they're probably going to put a really high interest rate on it. The reason they're going to put a high interest rate on it is because you're trying to build your credit. So you're going to want to make small purchases and then pay it off to make that interest rate come down. And you may have a limit on your card of like $2,000. You guys understand that? So, you can get credit cards through banks. You can pay them off through banks. Okay? And then another thing that banks do, it says that they have retirement and investment accounts. So the fourth thing is they have retirement and investment accounts. Okay? Common sense, if you have a retirement fund, what are you saving up money to do? When you retire, you'll have something to pay for stuff, right? A supplemental income. And an investment account is like for stocks and bonds. I can invest it in something and hope my money grows. Y'all with me? So I can do all that at a bank. That's a lot more stuff than I can do at the ones we discussed yesterday, right? So it says the interest rates charged on loans is lower than that charged by payday lenders, and customers can develop a financial history. So underneath that, here's how I'm going to write this. Okay, so I'm going to move my paper where you can see it. If I can make it move here. And I'm going to move this one out of the way because I'm going to tell you how to write this. All right? So far with these notes, this is kind of how I've put it down as far as these financial institutions go. Okay? That's what I know banks are allowed to do. Y'all with me? So, the next thing that I want you to put down is basically just the benefits of the bank. So, the first one is they offer lower interest. On loans. Okay? And to give you an example of this, I told you yesterday that most of these payday places, these check cashing stores, their interest is like 25-30% or more, right? That's a lot of interest. If I go to a bank and get a long-term loan, my interest is going to be less than 5%. You see what I'm getting at? So it's not, you're not paying a lot of interest, you're just doing it over time. Okay? So, first thing is, the interest rates charged on loans are lower than payday stores and check cashing stores. Okay? Interest is lower on loans than payday and checking. They are higher, check cashing stores. Okay? The second really cool thing about a bank, and this is the part that a lot of you all are going to need to know one of these days, is you can develop a financial history. Now, by developing a financial history, what am I trying to accomplish with that? Over time, every time I put money in the bank, every time I withdraw money from the bank, any kind of transaction I do, it's recorded by the bank. You guys understand that? So if I ever need to go in there and try to get a loan, they can pull up all that and say, well, this individual doesn't spend a lot of money, but they like to keep a lot deposited. They're probably going to be pretty good at paying back a loan. Or this individual may, well, they deposit things once a month and they usually spend every bit of it and they got to wait till their next payday. This guy may be something we may need to check out before we let them have a loan. So you develop a financial history. They can see how you do with spending money. Okay? So that's important when it comes to building your credit. Okay? Next thing they kind of do, and again, guys, banks are long. They do a lot of things. They usually only cash checks of customers. I should say members, not customers. So in order for a bank to cash your check, you have to have an account with them. Okay? They're not just going to cash anyone else's. Now, don't get me wrong. Carroll County, we've got like 5 or 6 banks in our little locality here, right? Well, if let's say I bank at Grayson National, and Jackson banks at Carter Bank and Trust. Will Grayson National cash a check from an individual that banks at Carter Bank? Yes, they will, because there's a close proximity there. You understand what I mean? They're not going to cash a check from somebody that lives in Mount Airy and has a bank down there. Do you understand what I mean? Because it could be a bad check. So if it's in your locality, most of the time they will, okay? But normally they only cash checks for people who are members of their bank, people who have an account, okay? And then the next thing that's different from banks than what we talked about yesterday, if you guys remember, and I just asked you this on your quiz, do payday loan stores and check cashing stores do a background check on people? No, they just kind of cash it and hope for the best, right? A bank, guys, they will do credit and background checks before they give you anything. The reason they do that is because what type of loan do most people get from a bank? Short term or long term? Long term. So they're going to make sure your credit history and your financial history is up to par before they allow you to borrow anything. Okay? So they do credit and background checks for loans. Okay? They do credit and background checks. Okay? Now, since that being the case, if they have to do a background check on people, do you think you would be able to get your loan that day? Are they going to be able to write you a check the same day you go in trying to get a loan? No. All that has to process. Do you understand what I'm saying? Now, if I go into a payday store or a check cashing store, will I get my money that day from them? Yeah, because they're not having to do any of this. Does that make sense? So a bank is going to check you out and make sure you're up to par, so to speak, before they're going to allow you to have any type of money. Okay? So you may not get money, you may not get loan same day. Okay? Now obviously, a bank is a lot different than the ones we discussed yesterday, and you can see for a lot of reasons. Okay? So does anybody have any questions? And guys, that's not everything a bank does. That's just kind of everything I need you all to know as far as this class goes. Y'all with me on that so far? Yo, Jay? Yeah, man. So, everybody straight with the bank? Does that make sense? Pretty simple? All right. Now, the other one that we're going to talk about is credit unions. So above the bank or wherever you put it on your paper, let's deal with credit unions because we need to know the difference. And again, you should already have this written down somewhere on your paper, right? So, a credit union. They are not like a bank for one reason, okay? They are unlike a bank because, and I actually left this out at the top when we were discussing banks, and I'll go back and fix it right here in a second. But first, actually, let's go back and fix it now. So up here at the top where you had the bank, is a bank trying to make money? They're trying to make money by how do they make money?
Interest.
Through interest, right? So a bank is a profit organization. Okay? They are trying to make money. Okay? That's important. They have people that work there. They have to pay those individuals. So they do try to make money. Now, a credit union, on the other hand, is unlike a bank because it is not for profit financially. Now, what do I mean by not for profit? Are they trying to make money? No. Now, could they make money? Yeah, they could. But the whole goal is they're not trying to. A credit union is a not-for-profit, okay? You will have a member. You have to be a member of a credit union to get the benefits of it, okay? So you have to have a membership for benefits. Same concept as a bank, right? Do you have to be a member of a bank? Yeah. Okay. Now, instead of writing all this all over again, all I'm going to put down here under credit union is they offer most of the same services as banks. Okay? So that includes checking and saving. We're not going to write all of it down again. The credit union can have checking and saving. They give out long-term loans. Obviously, there is a credit card involved with a credit union, hence the word credit, right? And they also have retirement and investment accounts. Okay? Just like a bank, interest on credit union loans are low. You can get a long-term loan from a credit union. Long-term loans on credit unions, okay? So essentially, guys, a credit union is the exact same thing as a bank. But what do you think the difference is from a credit union to a bank? What's the one major difference? You wrote it down. Is a credit union trying to make money? No, a bank is. Y'all got me? A credit union will do the exact same thing that a bank does. So all this stuff that we wrote up here applies to this as well. Does everybody understand that? Same concept. So if I were to ask you, of the four that we just talked about, which one is a nonprofit organization, you would tell me which one? A credit union. All right. Now, those are the four types of financial institutions that we needed to go over as far as what we're dealing with in this class. So yesterday, I gave you a handout, or I tried to. That had some questions on it about which one would we use? Does that make sense? And this was under your classwork. Y'all said y'all couldn't read it well. Some of you said you couldn't read it well. I think that's a lie. I think you just didn't want to do it. But anyway, we're going to go through this together to kind of make sure you understand which one you would choose. All right? So, we're not going to write it down. I just want you to tell me which one you think you would pick, and I'll just talk through it so the people online can hear it as well. Okay? So, yes, Solomon. Can you? Yeah. Okay. So, letter A there. It says, where can I go to cash a check if I don't have a checking account? So, of the four things that we just discussed, which one would we go to try to cash a check if I don't have a checking account?
Check cashing store.
What's that?
Check cashing store.
Yeah, so we would go to a check cashing store. So I'm going to write this out for the people online. So just give me a few seconds between them, all right? So that would be a check cashing store. So far, so simple, right? Easy enough. Letter B says, where can I go to develop a financial history without being a member owner of a financial institution? Now that breaks it down to two, right? I could go to a bank to build my financial history, or I could do it through what? Which one? What was the very last one we talked about? It does the exact same thing as a bank, a credit union. So, where can I go to develop a financial history without being a member or owner?
Credit union.
Credit union. No. You got to be an owner of a credit union or a bank. You got to be an owner. So, which one of the other two?
The payday loan store?
Think about it. Does payday loan stores do any background checks?
No.
No. So, there's no worry about the putting it there. Do cash checking stores do credit checks, or excuse me, background checks? No. So they're not going to have any financial history on me. The only two that has financial history would be a bank or a credit union. Y'all got me? Which you've already said. But then it says, without being a member / owner of a financial institution. I have to be a member of a bank. Do I have to be a member of a bank
Yes.
to get a loan? Could I go in, I bank at Grayson National. Could I go into Carter Bank today and say I need a loan for $5,000 and them fill out all the paperwork? And then if I get approved, become a member of it? I could. Y'all see what I'm getting at? So it would be a bank or a credit union. Y'all got that? You said it earlier. I just wanted to make sure you understood why you said it earlier. Okay? Letter C there. It says, where might I have to pay interest rates of over 300% on a short-term loan? Well, which two can we knock out right now that's not going to happen? That's not going to be a bank. It's not going to be a credit union, right? So, if I'm going to have to pay interest on something, is that going to be at a payday loan store, or is that going to be at a cash checking store? It's going to be a payday loan store, exactly. Does everybody understand why? You've got to pay that loan back by your next payday. And if you don't, that store is going to make you take out another loan. You see what I mean? So it can be very, very hard to get caught back up. Letter D, where can I go to develop a financial history and be a member? I could do that at a bank, or I could do that at a credit union. The next one's pretty easy. Where can I go to cash a check without needing a credit bank background check? That's check cashing. What type of interest am I going to pay there? High. Letter F says, where can I safely save my money, knowing that it is insured by the federal government if the financial institution fails?
Bank.
That would be a bank. Could it also be a credit union?
Yes.
It could, because if you look right here, if I can find it again, credit unions. Oh no, I apologize. It cannot be because it is a non-profit, so the federal government will not do that. So a bank, if it goes under, the bank will qualify your loan, meaning that they will back up your money. Okay. Letter G, where can I get a long-term home or auto loan?
Bank or credit
I
union.
can do a bank, or I can go through a credit union. Letter H is asking you, where can you get a loan immediately? Like the same day I go in there, where can I get
Payday
that loan?
store.
That would be a cash checking, or check cashing, check cashing. Or a what?
Payday loan store.
Or a payday loan store. Why can they give it to you immediately? What do they not require from you?
Credit
Background check. And then letter I says, where would I pay the highest fees to purchase a money order? Highest fees gives it away. It's either got to be a cash loan or check cashing store or a payday loan store, right? Because of high fees. So which one up here is talking about money orders? And if you go back in your notes, right here it says purchase money orders. So that would be a check cashing store. Y'all got that? So letter I believe it is check cashing. Is anybody confused about those answers? Does that make sense? Oh, I thought I was showing y'all mine. I was just showing you the empty blank one. All right. So then lastly, you got a couple questions at the bottom down here. It says, which of the 4 financial institutions do you think would be the most useful to you?
Bank.
Yeah, obviously a bank. Okay. And then explain your reasoning.
Well,
Why do you think a bank, and I think so too, I think a bank, that's why the vast majority of people keep their money in a bank, because it's the most useful. Why?
because if the financial institutions fail, the federal government can.
Exactly. Explain the reasoning, put down that it's backed up by the federal government. So if something were to happen to that bank, nothing's going to happen to my money. Does everybody understand that? The rest of them, there could be a problem with my money. Okay? Now, does anybody have any questions about that? Does that make sense? Yes, no, we good there? All right. So, tomorrow, what I'm going to do is I'm going to add the banking and the credit union questions to the quiz that you just submitted to me. Is everybody with me? I'll make a new one. I'll make a new one and send it to you. All right? And it will just have banking and credit unions on it. So it's going to be like 7 or 8 questions max. Y'all got it? That'll be due tomorrow. On Thursday, I'm going to put your test together, or not a test. I'm going to start SOL 7, okay? Because 6 is just A and B. We're literally done with it. Y'all got me? This is how it works. We're going to go through 7, and then we'll have your test, which will probably happen some point next week, okay? So, the 9 weeks ends on Friday, the 16th, okay? What I need you all to do over the next 3 days, because you're not going to be with me, is look at your Power School. If you are missing a grade for something, and it's a 0 or there's no grade there, you need to get that turned in to me. All right? Now, every one of you have a grade in Power School that is blank. Deals with supply and demand. I did not grade that on purpose. I just wanted to make sure you knew how. Remember when we done the demand curve and the supply curve?
Yeah.
And then with equilibrium and all that? I was just trying to make sure you guys had an idea. We're going to revisit that during the next 9 weeks as a review. Okay? To make sure you can still read those. Which one was the first curve? Y'all remember? The one that went like this. What's that? Was supply. And then the one that went like this was demand. Y'all remember?
Yeah.
So that's how we're going to go. That's the part that I didn't grade. So if it's blank, don't worry about it. It's not counting for or against you. But if it's a 0,
It says excluded.
it does say excluded. Okay. But if you don't have something turned in, please make sure you get that to me. Okay? All right. That's all I got for today.